The stock market is up big today as Trump says he will reduce tariffs on China substantially. The president also says that he has no intention of firing Chair of American Central Bank Jay Powell. And in response to this, looking at the NASDAQ, you can see we've gapped up and continue to charge higher on this double whammy of good news. And a quick update on my gold trade, I am officially all out and took profits on this move after we saw a significant drop off and break of structure here around 32.80 per ounce. Obviously, gold is dropping very hard on this news because this kind of restabilizes the situation in the United States, and gold thrives on that uncertainty. The dollar index in the last 24 hours has also bounced back pretty sharply from its kind of free fall state, just reinstating a little bit of confidence in the United States now that Jerome Powell and Trump don't seem like they're going to get into a fist fight, and Trump seems a little bit softer on China than he was a couple days ago. And if you're finding it hard to trade this whipsaw back and forth kangaroo market, you're not the only one. Headlines are incredibly back and forth. One day things are good, one day things are terrible. And this is exactly why when it comes to my trading approach, I remain systematic using tools like the Edge Finder and simple price action to help spot trading opportunities. Again, headlines like this, which look really exciting, can turn into ugly ones the next day. But staying focused on the economic data, technical data, and sentiment data grounds my trading approach and allows me to filter out the noise. And currently we're doing our biggest discount all year long on the Edge Finder. If you'd like some information, use the promo code YTVIP. In the description down below, you'll find a link to where you can explore the product and its full list of features. If you have any questions, you can chat with our support team using the first link below. So if we zoom in over here at the time of recording, you can see pretty much all of the US indices are up and away, with the NASDAQ leading the charge, up 4% at the time of recording. And the NASDAQ itself, which has been struggling in recent months, is trying to break away from this downward trend line that we have drawn on the screen. We've gapped higher, and now the question is whether or not we can actually break this level of resistance. And this is the key here, because while the Edge Finder has a very bullish reading on the NASDAQ, I need to clarify that the Edge Finder is not a timing signal providing software. It simply provides a directional bias for our favorite currency pairs, commodities, and indices. So the NASDAQ getting a bullish reading basically tells me, okay, most of our conditions here that we're filtering for example, good inflation data that we've had recently, or better than expected retail sales data, employment data that looks okay, and COT data that looks really strong for the NASDAQ. These are just a couple of the things that the Edge Finder's algorithm are considering to produce this very bullish reading. But then we look at price action and say, okay, that's all good, but price action's not quite where it needs to be, at least for me personally, to take an entry. I am watching this 90-day pause Wednesday move that we saw a couple weeks ago. We saw that big exciting up move, but it fizzled out and buyers were not able to stabilize. Now I'm looking for a signal that we've broken this downward trend line, but also we need to break this resistance level for me to get into a bullish setup. So specifically, I'm looking for follow through, a break and close above this 90-day pause announcement day, and a pullback into that area in which I would probably take a long position looking for a continuation move to the upside. For those watching the NASDAQ on a daily chart like myself, we put in this low and we've been putting in these attempts to make higher lows, but I think we need to really see a solid breakout before determining that we've actually flipped back into a bullish trend. And the reason I'm so adamant about that is because over here, I said the exact same thing, and we never got the breakout of this resistance point, which kept me from getting in a trade, which would have definitely been a losing one. So I'm waiting for that determining breakout here before looking to get long. When it comes to gold, like I said, I've taken profits on this move. It ended up being a 16-day long trade for me, which sounds like a long time, but I am a swing trader, so I hold positions as long as they want to keep going in my favor. So obviously, with hindsight, I shoulda, woulda, coulda closed around 3,500, but that's not the style of trading that I do. I never know when a trend is fully complete, and what I do to get out of trades that I'm in is to mark key levels of structure and to trail out if needed. So could gold continue to push higher from here? Maybe, but again, it breaking this level was enough for me to go ahead and lock in a profit and set up for the next possible trade on gold. I am still bullish on gold, but would like to see a proper pullback before entering a second time. This was definitely my best trade of the year so far, resulting in over $40,000 of profits on this move. Obviously, at one point it was up to 60, so I definitely gave back some of those profits, but again, this is why I stay systematic and respond to what the market's doing, not trying to predict the top. Because if I had taken profits when I felt I should in my gut, I would have left a lot of money on the table, right? I use a system that is lagging on purpose. I trail stops because trailing stops while lagging can also catch really big moves. And this was a great example of that in action. So now that I'm no longer in gold, what am I looking to do next? Well, I'd like to see a pullback going from this swing low to the swing high of somewhere around the 50 to 61.8% retracement before even attempting another long position. I think we got really stretched here and we were due for a retracement. Now we're starting to see it. Maybe we don't get it. Maybe we just bounce and continue higher. But for me personally, to get back into another gold long, I'd be looking for some failure here to continue down into this range of support, telling me that we've kind of corrected some of the euphoria in gold buying that we saw. Of course, in order to enter a trade, I would also need to see gold still getting a bullish rating on the edge finder. And part of the reason I think we're getting such a violent reaction to the upside on stocks today is because people have been terrified of this market. Take a look at the put to call ratio, which compares the volume of puts versus calls being traded in the options market on the S&P 500. When everybody is scared, this line goes up, basically saying that everybody is out there buying puts, which are insurance or bearish bets on the market. And so again, I think everybody has been so scared, so bearish in this market. We got a little bit of good news here today with the Trump and Powell story cooling off a little bit, as well as Trump maybe looking to work a little bit closer with China on coming to negotiations. And we see the market absolutely tear to the upside simply because positioning is so off center. Again, everybody and their brother was short the market over here, it seemed. And then all of a sudden we had such a violent up day, one of the biggest up days in history, because everybody was on one side of the boat. And they're still very bearish. Like, people are still overall very positioned bearish. We can see this in the investor sentiment survey here. We can see for a suspended period of time, most investors are feeling very bearish on this market. But with inflation that is mostly cooling off, a jobs market that is relatively stable, weekly unemployment claims remaining at a good level, an unemployment rate at relatively strong historical levels, I think that we may very well be ripe for a big old-fashioned short squeeze to the upside. Now, again, I think a lot of people this year are also letting their politics get in the way of what their decisions in the markets are doing. Whether you like or dislike what is happening in the White House and in the administration right now, I think there's a lot of people who are not fans of Trump who are super bearish on this market. People did this under Biden as well. People really didn't like Biden. They really didn't like, they thought, oh, he's going to send us into an inflation spiral and it's going to get terrible. And meanwhile, the stock market ripped under Biden. It ramped under Trump 1.0. And I do think that it still has the legs with this AI revolution stuff that's going on. I still think that's a big theme that will continue to bolster markets for coming years. I actually think that there is some wonderful opportunity to look to continue to buy the dip, which is something that I personally have been doing in my own portfolio. Here's a list of stocks that I've been accumulating here recently in my portfolio during this recent market correction. You can see I've got things like Tesla, Amazon, Nvidia, Robinhood, Meta, American Express, Fortinet, Intuitive Surgical, Airbnb, Apple, Delta, Salesforce, Google, PayPal, Home Depot, Uber, ExxonMobil, and I just closed out of my gold trade for a final profit of around $40,000. And here is the final P&L on this gold trade, which at one point was up $60,000, which I know you might already be thinking, Nick, why didn't you close it when it was at $60,000 up? But that right there is the dangers of hindsight, right? The dangers of hindsight are saying, oh, I should have closed it right there. I should have closed it. I knew it was going to do this. We never know. All we can do as traders is make educated guesses and plan our trade and trade our plan. So at this point, what I did was I continued to trail the stop at a very loose rate, which was the reason I stayed in a trade like this at all, right? I trailed stops loosely and ultimately gave back some profits, yes, but ultimately made way more than had I just taken profits preemptively or too soon over here. Everything has a pro and a con. I equate it to like in video games when you're selecting your class within a game, right? There's always the heavy class or the which is strong but slow, or you can go for the class that's, the fast and weak class, right? Same thing in trading. If you're trailing stops, if you're taking partials, if you're taking, 3-to-1, 2-to-1, 1-to-1 risk to reward, whatever your approach is in the markets, there's always a strength to it. There's always a weakness to it. Instead of bullying myself about how I should have closed this trade here, here, I'm actually just patting myself on the back because I stuck to my rules and I caught a great trade. Now it's time to take profits and find the next. Euro's starting to pull back here. I may take a small initial attempt on the long side if we get a push back down here, but I'd really love to see a reversal down to this 1.09 level. Edgefinder still has a bullish setup on the euro, so I'm going to watch that close. Bitcoin is another one I'm watching. If we can get a retracement back down to this 88 to 86,000 level, this area here, I'd potentially be interested in getting a long position set up. The British pound against the dollar is another one I'm watching. Let's see if we can get a push back down to 1.31. Dollar yen trying to bounce. Would love to get short if we get up to like 147.50 or 60, as long as we continue to have Edgefinder confirmation here. But right now, actually, we dropped back down to neutral. So going to have to keep an eye on what the Edgefinder has in store before taking any trades. And today's video is sponsored by Vantage. Vantage Markets allows traders to trade with low trading fees. They also offer a very generous welcome bonus to my subscribers, which that link for that subscriber bonus can be found in the description of my video down below. Vantage allows traders outside of the United States to trade CFDs, which allow you to trade pretty much everything. That means you can trade gold CFDs or stock CFDs, things like XAU USD, but you can also trade Apple CFDs or Nvidia CFDs, Tesla CFDs. They allow you to trade pretty much everything under a single brokerage. So check out Vantage if you have not already, down below in the description.
Well, guys, markets have absolutely soared today, mainly down, I think, to some fairly dovish comments from US President Donald Trump about not only China and Chinese tariffs, but also his attitude towards US Fed Chief Jerome Powell. So, Nick, I believe this is probably good news for markets.
Yeah, Johnny, it's an interesting way the market is behaving in recent times. We had that 90-day pause day and the market ripped 10% in like 30 minutes. It was absolutely astounding, but it only foreshadowed more volatility to come. I mean, before that, there was volatility. After that, it's just, we're living in a crazy, crazy volatile market. It almost is like the entire US stock market is behaving like a crypto coin these days. It's just insane to watch. But as you pointed out this morning, we did get some very perceived as positive on the trade negotiation stuff. The idea that the US may look to lower or is considering lowering tariffs on China. Obviously, that's the big uncertainty component here, is that we know there is likely to be some sort of a negotiation between Japan and US and Europe and the US and all that. We know there's likely to be not to say those things will come painlessly, but there will be some progress there. The big question has been, is there going to be any concession on either side from China and the US? So any positive thing, I said earlier on a live stream that I was on, that if you just heard that President Xi and President Trump were going to be on a phone call, regardless of what was said in the phone call, if you just heard that news was coming, if they had a scheduled call, the market would probably be ripping 5% or more. That's, obviously a guess, but it's just the way this market is behaving. It's very concerned. Everybody's uncertain. So these little bits of good news that we're getting are causing some wild swings to the upside and to the downside. So yes, the Chinese tariff concept, basically the idea being that according to the Wall Street Journal, China tariffs likely coming down to between 50% and 65%. And the White House is considering slashing those tariffs to de-escalate trade war. It is a little bit silly, I think, on either side to just assume that there is just a clear winner or a clear loser in the trade war stuff between the United States and China. I think it is a lose, lose, lose. And I mean a lose for the US, a lose for China, and a lose for all these countries in between that are getting forced to choose a side. I think that creates tension. It creates, a backward stepping global economy where we're segmenting off trade. And I don't think that either side really truly wants to see that take place. So we are seeing some concession there. And we do see the NASDAQ, as you mentioned, ripping higher here today, at one point up 4% on the day. We'll see if it can hold those gains. Again, based on the way markets have been behaving, it's up one day and then down the next, and very hard to get a read. I do think from a price action perspective for traders who are watching that, investors who are watching that, The NASDAQ, 19,200. The S&P 500, around 5,500. Those are key levels. Those are big levels of resistance going back to that 90-day pause up day that I mentioned a moment ago. We had those big spikes up and then rejection from that area. Let's see if if bulls are actually able to take back those levels and hold some gains for some material amount of time.
Just following up on what Nick has been saying, I think we're seeing here from the White House, from President Trump, perhaps more of a carrot than a stick that we've seen in the last few days, where the markets were down 4 days straight, the Dow Jones, which was up 1,000 points yesterday. We saw two key developments. As Nick mentioned, President Trump said he had no intention to fire Powell. Really 180-degree turn after what he said the previous few days. And the Treasury Secretary the U.S. Treasury Secretary also said that the U.S. would de-escalate with China, as you mentioned, with the tariffs. And I think we're seeing some kind of de-escalation, at least in the rhetoric, as far as the U.S. is concerned, which is quite interesting and I guess an optimistic note as we see these very erratic market swings.
Yeah, Kenny, one thing that I find to be really interesting in all this craziness that we've seen in recent times is that many people thought that Trump's scorecard in this administration, like his previous, would be the stock market. I would actually say, and I'm not the first to say it, many people are acknowledging that it seems to be the bond vigilantes that are getting Trump's attention. In fact, we see a response in the bond market today that is favorable towards the administration. They seem more interested in getting that 10-year yield down than they care on really getting the stock market to pump higher. And so I think that what this is telling you is that the bond vigilantes are accomplishing their goal of potentially keeping Trump and team in check. I mean, this is a democracy at the end of the day, right? There are powerful forces that are checking the situation to a degree, right? That, as you mentioned, that turn on the stance on Powell very quickly is perceived as a very positive thing for U.S. Treasuries, because again, if you were to remove Powell or at least threaten to, if there was infighting about trying to get Powell, that is not a stability look for the U.S. Treasury market, the U.S. bonds and debt in general. People actually in recent times, we can see this, have been selling U.S. Treasuries in large and moving into gold.
I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.